Firstly, thank you so much for your time, for joining us this afternoon. Nils and I are very aware of how busy and volatile the markets are, especially this week. So this presentation is going to consist of myself and my colleague Nils going over the global supply and demand balance for ethane, and we're going to be focusing on exports out of the US and terminal infrastructure developments over the next 12 to 24 months in particular. Then we're going to move on to the demand side in relation to the upcoming steam cracking projects, which are going to be driving demand. And I'm going to talk about some insights related to the general petrochemical industry. At the end of the presentation, we're going to open the floor to a Q&A. And we're hoping to be done within about 30 minutes or so. So please bear with us. In terms of quick introductions, my name is Ciaran Tyler. I'm based just outside of London. I've been working for Kepler in their Insights division for just over 2 years now. I have about 8 years under my belt working as a light end / NGLs analyst in the commodities market. And I'll let my colleague Nils introduce himself, and then we will kick off by looking at the global ethane supply.
Yeah, thanks, Ciaran. Hey, everyone. Thanks for taking the time today. My name is Nils Jenson. I'm cover NGLs on the Insights team at Kepler. Been here for almost a year now. Been in the industry for 10 or so years. I started as a hedge fund analyst covering energy equities and global crude balances, and then moved over to Genscape, where I did daily crude production estimates based on things like satellite detections of flaring, gas nominations, other kind of daily signals. So kind of got into this space from the upstream and then worked my way downstream. And I'm based in Denver, Colorado. So hope to meet some of you US-based folks when I'm in Houston or New York. So I'll kick us off in the presentation here. Kind of start with the supply and export side. So obviously a very US-driven story. We get the occasional export from Norway before European gas prices got too high. Kind of the same thing from the UK, but it's really about it. So in the US, of course, we have the shale production growth kind of outpacing domestic demand. So exports to Canada via pipeline starting in 2014, and then waterborne exports in 2016. And you can see the jumps in the export chart on the upper right when new terminals come online. So Marcus Hook and Morgan's Point in 2016, then Energy Transfer Nederland in 21. And then meanwhile, production just kind of growing more steadily. So kind of similar bottleneck and debottleneck cycle that we have with other infrastructure like pipeline capacity. So this year we have U.S. ethane production kind of continuing that pretty steady growth. We have about 4% year over year, so a little slower than the last few years, but still chugging along. Gassier trends in the Permian, a lot of supporting infrastructure to keep NGL and ethane production going. More gas processing, more Permian takeaway, fractionation, more export capacity, and then increasingly integrated players along the whole value chain. So all of that kind of combining to support continued production growth. And then on the export side, we have another leg up in 2025, so about 94 KBD increase in exports. So on this slide, we'll talk kind of break down those the increase and where that's coming from. So there's kind of two main projects and one kind of more marginal increase that we see unfolding this year. So the first one, the one with the most uncertainty, is ET Nederland. So there we have added export capacity for ethane that's part of a bigger 250 KBD NGL project that's due online in the middle of the year. They haven't announced like exact product splits, but they did mention ethane exports starting in June. And then propane in July, ethylene in later in the year, like November, December. So if we look at the product splits over the past couple of years that you can kind of see in the lower right chart there, until we get more info, we're kind of assuming that additional 250 will be split about a quarter ethane, quarter ethylene, and 50% propane. So that would be about 65 kbd of additional ethane capacity. And as that's ramping up around mid-year, it'd be about 34 kbd year over year increase. So you can kind of see in the upper right-hand chart there, the drop in exports last September and October. That was mostly on the LPG side due to some tie-in work there that caused some turmoil. But ethane really wasn't impacted. So just kind of keeping an eye out there to see if there's any further tie-in work before the ethane expansion comes online in June. The other big project this year is Enterprise Neches River Phase 1. There we don't have the product split question. It's just all 120 kbd ethane capacity. So there we're just kind of assuming that it'll ramp up fairly quickly in Q3. So that'll be a 45 kbd year over year export impact. And then finally, we're just assuming a little higher utilization rate at Morgan's Point this year. They're already off to a better start, a few hiccups last year, and they have an optimization project that's due online later this year that'll improve loading rates. So year on year basis, about 15 kbd jump in exports out of Morgan's Point. So those are kind of the main export projects for 25. If we look out a little further, we have more capacity coming online in 26 with Neches River Phase 2 online in the first half of 26. So that's 180 ethane, 360 propane, or a combination. We see that favoring ethane. Enterprise has announced just a bunch of ethane contracts on earnings calls that basically cover all their ethane capacity. And they're also working on the LPG expansion at the Houston facility. So that's due online at the end of 26. So probably be an LPG focus there in Houston, while Neches River is more on the ethane side. And then ET Nederland at the last earnings call, or ET mentioned a Marcus Hook optimization project that is under construction. So we don't have a date on this, but just kind of a reminder that there's, we're usually talking about the Permian growth, but Range and other producers are growing in the Northeast as well. And if we look a little further ahead, there's going to be a new exporter in 2028, obviously a ways out, but with how concentrated this has been on the US side, interesting to keep an eye on there. It's part of a bigger project at the UAE to grow and monetize on the gas side. So obviously they're growing a lot on the crude capacity that we hear about with the OPEC discussions, but they're also expanding gas processing quite a bit as well. They have one project that's for a domestic cracker near Ruwais. That's more kind of what we usually think about with ethane in the Middle East, just staying domestic. But there's also a project called LNG 2.0 that is on Daz Island that includes about 70 kbd of ethane exports, along with more NGLs and LNG. We've heard of LNG cargoes having almost 12% ethane out of the UAE. So there's a lot that they can monetize there as they're growing gas production as well. So still a ways out on the UAE, but given how concentrated this has been on the US side, kind of worth keeping an eye on as that unfolds. So I will pass it over to Ciaran now, and we'll switch gears to the demand side.
Thank you very much, Nils. Yeah, so I want to talk a bit about the demand side and the most significant developments we see occurring and the trends which have occurred in the global petrochemical industry over the last few years and whether we see them continuing on. So I think the first thing I wanted to talk about is, why is it that ethane cracking in particular is receiving a lot of attention and a lot of investment over the years, even outside of North America and the US. And as you can see on the two charts I've shown there, one of the primary reasons to incentivize petrochemical majors to start thinking about building ethane crackers or converting facilities or upgrading them is simply because ethane cracking margins have outperformed competitors significantly over the last 5 years or so. If you look at Asia in particular, you'll notice that simple steam cracking margins have been below typical break-even levels since the second half of 2021. And margin compression has not been that present if you can run US origin ethane, or alternatively, particularly in China and as we've seen in Taiwan, if you can crack sanctioned naphtha or Russian origin naphtha. Everyone else is struggling. If you have a simple setup, you're losing money and you're only just about breaking even further down the value chain, depending on what type and level of integration you have. I think the other thing I want to mention is particularly important in OECD countries is lowering carbon intensity and cracking ethane rather than cracking naphtha. It's much less energy intensive, A. B, you have a high yield of hydrogen-rich fuel gases, which you can either recycle at the furnace as a sort of low carbon fuel, or you can, as a value added, purify that into a hydrogen stream and sell that to a the local hydrogen market if the price is right. As we know, hydrogen in parts of the world, such as Northwest Europe, has been pushed as a green fuel of the future. So there's a few things going on about why ethane cracking makes more and more sense, and why, as you'll see later in the slide, why it's taken more and more of the global feedstock slate compared with naphtha and even LPG. This year and into next year, a lot of the growth is going to be driven by Asia. But I want to just quickly talk about some of the trends we've seen over the past few years and what we're going to see this year. So North America, particularly the US, has dominated the ethane demand. This is primarily just to fresh cracking capacity ramping up, either pure ethane facilities or ethane propane facilities, or the conversion of some crackers to be able to flex between ethane and other feedstocks. In recent years, since 2021, as you can see, it's also been driven by Asia. That's primarily China, but also in India, new ethane-fed crackers or upgrade projects to make crackers more flexible coming online. And I wanted to highlight our call on 2025 because it may look a little bit odd. So the Middle East drop there that we're forecasting is due to what's happening in Iran. The country's been suffering a significant energy crisis. It became very acute last autumn and into the winter. And we saw industry reports at the start of this year. Iran stopped sending natural gas to its local petrochemical facilities and dramatically scaled back and wound down utilization rates at their NGLs crackers, a number of which are primarily ethane-fed crackers. So that Middle East drop is primarily our call on the fact that we don't see any particular growth outside of Iran this year. And we don't see competing crackers in the region being able to increase rates as Iran decreases rates, because they're already running close to capacity in neighbors such as UAE and Saudi Arabia. So this is essentially saying that for a total global ethane demand balance, we see a big drop out of Iran. Now, that's obviously not going to affect global flows, and that's because Iran does not have any import-export infrastructure to move ethane in and out of the country. Now, outside of Iran, you can see we do see growth in North America, which is primarily due to Braskem increasing steam cracking utilization at one of its crackers following the construction of a new terminal, allowing them to import more ethane from the US. And in Asia, it's a combination of new crackers ramping up and conversions. So I'll go into a bit more details in the next slide about these. So in China, our current call for this year is that ethane demand and thus imports, because we don't see Chinese supply increasing year over year, will be about 48 kbd. So that's going to account for a 51% of the ethane import demand growth this year. We saw last year 2 propane-fed crackers in China announced that they're going to be converting away from propane and instead moving to ethane. One of these projects, Huatai cracker in Ningbo, has already completed that process. That was fairly quick because, as far as we understand, it was initially designed to be able to crack ethane, and then they decided to move onto cracking propane. So it didn't take them long to essentially needed, I believe, to install some ethane tanks and upgrade some import facilities and infrastructure. But they didn't have to do major works to swap out the cracking foils and change some of the byproduct tanks on site, which means that they're able to complete that within a few months. The other ethane cracker that is going to drive demand in China this year, of course, is Wanhua's number 2 cracker. It's a flexible feed cracker between ethane and naphtha. We have heard that at the moment it's favoring naphtha, which is primarily due to the fact that they are waiting for some new very large ethane carriers to be delivered before they can start moving US origin ethane to the facility. So we expect they're only going to really ramp up ethane cracking at the site in the second half of the year, sort of from Q3, depending on how quickly the new very large ethane carriers are delivered. I think it's also worth noting what's happening in Europe. We're not seeing a dramatic change this year. SABIC has invested around $1 billion to upgrade its cracker in the UK. It's downsizing it by removing one of the cracking furnaces, but upgrading it just to be able to import and process pure US origin ethane. Now that project had a number of setbacks, essentially. It was originally meant to come online last year, and that's now been pushed back. At the moment, we are expecting it to begin test runs in early Q3. There is a possibility that gets pushed back to the end of the quarter or even into Q4, so that's a bit of downside risk to our European demand growth this year and would push more of it into next year. But for now, our base case is that we will start seeing test runs beginning at the site in Q3, which is going to help buoy European imports year over year by about 15 kbd once it reaches full rates. So I'm going to actually quickly hand back the presentation to Nils, who's just going to go over some of the proposed US port fees and the potential effect they will have on the very large ethane carrying fleet.
Yeah, thanks, Ciaran. So obviously lots of questions here, but top of mind with these port fees and anything else that we hear today that's ethane specific with these broader tariff announcements. You guys are probably familiar, but the proposed port fees cover Chinese owned or operated vessels, Chinese built vessels, or any operator that has a vessel on order from a shipyard in China. So, any one of those conditions or all of them could apply to a lot of vessels regardless of the sector. But really big impact on ethane just because a lot of Chinese vessels, but then also a lot of US port calls given the concentration of supply here. Looking at VLECs, 31% of the active fleet is Chinese built. And that's going to increase in time. You can see the chart on the upper right there that has the delivery country by year. So you can see that more of the recent deliveries are from China. So 41% of VLECs delivered over the last 5 years are Chinese built. And then of the ships on order, 37% of combined VLGCs and VLECs are coming from Chinese shipyards. So definitely a fleet that's growing and a fleet that's becoming increasingly Chinese built. So the fees proposed as they're written right now don't depend on the size of the vessel just kind of how many of those boxes that you tick. So if you're just looking at it for a VLEC, the fee could range from 30 to 70 bucks a ton. But it's much higher on smaller vessels, or if you make more port calls. So like a voyage from like US to Caribbean, Central America, Mexico on smaller vessels is going to be really impacted. So like that Braskem cracker that Ciaran mentioned has some medium gas carriers that are running, and the fee on those could be 75 to 175 a ton. So pretty big potential impacts here. This was proposed by the U.S. Trade Representative, and it's going through a little more of the normal process where we had public comment period and hearings. So we'll see how that plays out. A little different from the executive order. So possibly, hopefully, more room for this to get dialed back, given how much of an impact it has just because of that high share of Chinese vessels and U.S. exports. The other issue that we're watching is deliveries of new vessels with all these new demand sources and new export capacity ramping up. Ciaran mentioned Wanhua number 2. They'll probably need to get 2 or 3 VLECs to get things going on the ethane side there. So that's probably a Q3 H2 sort of timeline for them ramping up on the ethane side. Other deliveries this year so far have been moving along pretty well. There's one VLEC that was delivered just last week from a Chinese shipyard to Satellite. Reportedly, that was 1 month ahead of schedule, and that's the same shipyard that we believe will deliver the Wanhua vessels. So that's a good sign there. And then the Braskem cracker that we mentioned, one of those medium gas carriers was delivered in January, and the other was originally set for June, but now is set for April. So they're also on a good pace here. So really a bit of a bottleneck right now for Wanhua, but there's about 10 to 12 VLECs scheduled for delivery this year, and they're more back weighted, so kind of in line with the terminal startups that we mentioned earlier on. So if we go to the next slide, now that we've talked about kind of the supply and demand drivers, we'll talk a little bit about balance implications in a couple key countries and regions. I'll start with the US, where you're basically flat domestic demand, so production and exports really making the difference here. This year we have kind of that continued production growth that I mentioned, and then export growth keeping up. So just a tiny uptick in demand. So really just kind of small implied stock draws this year. Next year is when things change quite a bit. We have production growth slowing down, but still adding a pretty good 92 KBD next year, year over year. But export capacity really jumping by then. And that creates a pretty big implied stock draw of like 85 KBD, which is kind of well above what we've seen historically. And so you have by this time next year, you start to have all those projects from this year that are ramped up, and then Neches River Phase 2 is going. So by the time you get to Q2, mid-2026, you're getting bigger draws and seeing upward pressure on ethane prices. But that does assume that these terminals ramp up fairly quickly to 90% or so utilization. So we may get a combination of like slower ramping up on the terminal side, but then also increased production, better ethane recovery to kind of make that a more reasonable gap in 2026. That's what we're seeing right now with the big increases in export capacity coming online, while production growth is continuing but slowing down just a little bit. So I'll pass it over to Ciaran to talk China.
Thank you very much, Nils. Yeah, so I mean, China's fairly straightforward. I mentioned a number of the projects, whether they're fresh cracking capacity or flexi crackers or conversion projects coming online. So we're essentially forecasting at the moment that Chinese ethane supply will largely not change year over year. I think we have to bear in mind, China's also not just net short ethane, they're significantly net short natural gas and LNG. So even though there could be some increased unconventional sourced sort of shale related NGLs plays going on in China, it's quite possible it won't be ethane being recovered and sent to PetroChina's crackers, but rather just bulking out the natural gas supply. So that will depend on some price sensitivities in the market itself. So at the moment, we're expecting no real change in supply, but on demand, we're seeing the significant increases. The conversion, again, Wanhua of their number one cracker away from propane, they should complete that project by early next year. And then we have their second cracker, which will be favoring ethane from the second half of this year, reaching full rates. And those two are going to be the largest ones to drive demand. Now, there are a number of announced projects about in relation to steam crackers in China, all converting away from naphtha and LPG and towards ethane. The question in our mind is, how long will those conversions take? Some of them longer than others, A, and B, will you have the very large ethane carriers and the import terminal infrastructure available in China to even feed the crackers once they have completed their upgrade projects? And at the moment, I think those two issues are going to be the bottlenecks for slowing down China's ability to rapidly increase ethane demand and ethane imports. So some of these projects, although they're initially announced over the last month or so, these are not going to be quick fixes which they can ramp up and change to ethane over the next few months. It will take a couple of years. We've also seen this outside of China, but in the region in Vietnam with Long Thong's cracker, which was only commercially completed just over a year ago. It had some technical issues, and also naphtha and LPG cracking margins have been very unfavorable in Southeast Asia. And they announced towards I believe, October or November of last year, they announced that they're going to look into upgrading it into an ethane cracker, but it's going to take a couple of years to complete that project. So there are some bottlenecks in the market. No matter how much profit you get from cracking ethane, you can't quickly switch, even if the supply might be there from some countries. So Europe, I want to talk a little about Europe. It's quite interesting. Other than SABIC's revamped cracker, the big one that the market has been waiting for, and the one which had the most significant impact on the local petrochemical market, is obviously INEOS's Project One ethane steam cracker. We expect that to begin test runs early in the second half of next year and reach full rates by the end of the year. And that's going to have a really major impact on Northwest Europe's base chemical market. INEOS is the largest merchant buyer of ethylene in the market, and essentially once they build this cracker, they will no longer and it's running at full rates. They're no longer really going to need to dip into the merchant market to buy ethylene. They'll have enough to feed all of their derivative assets, mostly polyethylene, through the value chain. So that's going to shake up the industry a bit. We've already seen this year and last year a number of steam crackers have to close shop. The most interesting one, I think, of late is the fact that Dow is, of course, going to be mothballing its Olefins number 3 cracker, which is actually flexible between naphtha and propane. It's one of the first very flexible assets closing in recent times. Most of the others have been largely inflexible naphtha-fed crackers, which has been the most uncompetitive. So we think that once INEOS's ethane cracker ramps up, it's gonna really cripple steam cracking margins for alternative feeds in Northwest Europe, and we're going to have to see a couple of other crackers close down, most likely in Germany this time. Now, for ethane in particular, though, what does this mean? Well, there's an interesting situation. The second half of next year, we think there's going to be a bit of a price tug of war between Europe, so particularly in Belgium from INEOS's new asset, and between China for US barrels, because as Nils went over, second half of next year, although you have export terminal capacity increasing quite significantly, we are less bullish on the US's ability to supply all of the ethane for these new crackers coming online, and therefore I think that's going to put some positive upside pressure for ethane differentials versus sort of US natural gas benchmarks in the US Gulf Coast region. Essentially, we're quite bullish on US Gulf Coast ethane spot prices from the second half of next year, based on all of this unfolding. That's the biggest takeaway from what we see happening in Europe next year. So yeah, as I said, it's going to be sort of a fairly quick overview of how we're seeing the main drivers in the market. And this final slide, I just wanted to highlight the dramatic change in the feedstock slate for base chemical production that we've seen over the last 15 years. This is primarily due to the shale revolution in the US. It's allowed ethane crackers outside of the US to be built, and it's allowed the displacement of naphtha crackers within the US and North America. It's essentially squeezed and helped squeeze a lot of the old-fashioned traditional crackers, which would have run kind of middle distillates type material. And we see it eating into naphtha's market share, especially outside of China. Now, if you look at what's happening this year in China, obviously there are several naphtha crackers ramping up, the majority of which are integrated with refineries, and we see the majority of the naphtha crackers coming online in China are going to be integrated as with their refining capacity as well. This means naphtha as a total portion of the global steam cracker feedstock slate is not going to drop much this year, but the trend is there, especially outside of China, in Europe in particular. We're seeing it in India and the Middle East, more and more ethane cracking, and moving away from naphtha cracking as a base. Yeah, and I think that's everything I wanted to cover on the presentation side. I think one last thing I wanted to highlight to our subscribers of the S&D product is we are going to include the global ethane balance, which we have a country by country breakdown on the terminal in Q2. We're aiming for it to be live by the end of next month. Fingers crossed, it might even be a bit sooner than that. And obviously that will allow you to, it's going to be linked to our add-in, and it's going to allow you to pull all of those figures into your own spreadsheets and play around with the data on our terminal. Also, with the inclusion of ethane, it's going to be completing the hydrocarbon products supply and demand figures, which allows you to also see a sort of total liquids balance as well. And if there are any questions about that, and if anyone would like to receive an Excel file of the kind of a flat Excel file of the data we have now, that can be arranged before it goes live on the terminal. So feel free to email myself or Nils or the generic insight email, and we can get that on trial for you. So yeah, thank you very much. I'm now going to open it up to questions that anyone may have that we can help answer.
Yeah, I've seen a couple come in, but yeah, feel free to keep entering them in the Q&A here, and we'll address them as they come in.
I think those questions are aimed at you, Nils. I have to say, it's on the supply side.
Yeah.
So the first question is: any plans for Qatar to export ethane, especially with that's the North Field project. I think it's Qatar obviously expanding the North Field gas and condi patch, which has turned them into a major supplier and exporter of LPG, but also allowed them, of course, to export a tremendous amount of LNG and crack more ethane domestically. Where do we still see Qatar, Nils?
Yeah, from what I've seen on this one, mostly on the LNG and LPG side, for exports, they do have a big cracker that's coming online late next year. I believe it's scheduled. That's about 120 KBD of demand. So I think that's going to be kind of where that ethane ends up versus exports. That would at least cover the first kind of wave of this, and then as we get into the other North Field expansions that are coming on later, might keep an eye out. But as for this first North Field East, that's kind of the main one that we see, that seems to be staying domestic. I can take this one about Canada as well.
Yes, yeah, sure thing.
So yeah, does Canada have the potential to export ethane in the future? I would say, they're growing the LPG side that with the Ridley Island terminal that is expanding next year on the West Coast. But they're still importing maybe, I think it's about 75 KBD last year of ethane from the US. So they probably eliminate that before thinking about all the infrastructure needed to export. And they might be more focused on the crude and LPG side in terms of like making big infrastructure investments to facilitate that. So yeah, probably not exports coming out of Canada, even though they have the unconventional growth on the production side.
Yeah, that makes sense. So, okay, there's a question here about Iran. So how does Iran's ethane/LNG petchem consumption reduction change their olefins supply and demand balance? Do you expect them to import more? If so, what derivatives? Yeah, I mean, it's a very good question. I think the issue with Iran is, as we're seeing with US sanctions ramping up, it's probably weighing a lot on the economy as long as on top of the ongoing energy crisis. So Iran naturally is a net exporter of some base chemicals. Most of those would go to China. Unfortunately, we don't track polymer exports, but Iran is an exporter of olefins. So what we expect to see is those exports being reduced significantly, focusing mainly on feeding the domestic market on those few plants that are able to run. Now, we have to bear in mind that the global olefins market is in a bit of a glut, and that we only see that increasing year over year with the number of new steam crackers ramping up in China primarily, but also outside of China, which is more than offsetting some of the closures in Europe and Southeast Asia. So essentially how I see this playing out in thinking about the global olefins market is just it allows some of the Chinese petrochemical majors to run their facilities a little bit harder because they're not having to compete with sanctioned Iranian olefins, which would, or discounted Iranian origin olefins, which would have come in as Iran sort of dials down its petrochemical production. Essentially the policy there by the government has been prioritizing feeding natural gas to residential areas and not the manufacturing base. So yeah, I mean, the big question in my mind and something we have to keep monitoring is how long does this energy crisis last for? I think there's a risk that it's protracted based on the current geopolitical situation and the fact that the Trump administration looks to be ramping up sanctions on Iran even more this year. So I think it's going to be difficult, especially once autumn comes around again and winter, and there's a lot more demand for natural gas. I think we'll have to throttle back feeding their steam crackers again. Now, looking at the global system, as I said, we're in a glut, A, and B, Iran is, although they do have a number of petrochemical plants, as a global percentage of, let's say, ethylene production, they're very small. So I don't see it having a significant impact on prices. Not this year. Okay, there's a final question. Oh no, we've got a couple more questions. Goodness, they're coming thick and fast now. So very large ethane carrier fleet will be around 100 vessels by 2030. Will the planned terminal capacity be sufficient to cater to them, the Middle East to Asia? Would highly limit vessel requirement? Will more vessels be ordered? Do you have any thoughts on this, Nils? So I will tell the participants now that Nils and I are short-term analysts, so we focus on the next sort of 18 to 24 months is the limit of our outlook. So although we are monitoring medium-term-ish questions up to 2030. We have a long-term analyst who helps us with that stuff. So we're mostly focused on spot and the next year or so. So it's a bit of a hard call to make, but I haven't read up on the sort of 2030 environment. But what do you think, Nils?
Yeah, I think I'd have to follow up on that and dig in a little more on the longer term aspect of that.
Yeah, we'll get back to you to that. Thank you for your question, and much appreciated. So we didn't find India in the ethane landscape reliance with a very large ethane carrier already an advantage. Many new are talking of ethane. Yes, of course. Yes. So India is in the a number of petrochemical majors are investing a lot of capital to build more ethane cracking capacity. So that's in the pipeline. It takes a long time to build these facilities, to expand the import infrastructure, as well as building the cracker itself. So we're focusing, as I said, on the next 18 months or so in the market. And we don't see any steam crackers in India, new ones coming online in that time frame. That said, thinking about the back end of 2027, I believe, and into 28, I believe there is new ethane cracking capacity coming online. So that's something we will, let's say, look at and address and incorporate into our model as we move into that time period. So when we give an ethane outlook this time next year, for the next year, we'll probably be a lot more focused on what's going to be happening in India. But no, we are very aware that a lot of capital is flowing into ethane-based cracking projects in India, and we expect that to continue. And I imagine, with India's sort of geographical position, if they can partner with suppliers in the Middle East, it would make sense for them the same way they import a tremendous amount of LPG from the Middle East, as it's such a short distance away. I imagine they'll probably start looking to see if they can work with partner companies in the Middle East to have them supply ethane. Now, the tricky thing with India is a lot of the Middle Eastern petrochemical majors have positioned themselves to feed the growing polymer demand in India. So they see India, some of them see India as a high growth market, similar to how China was, let's say, from the year 2000 up until 2020, where polymer demand growth and base chemical demand growth actually far outpaced GDP growth. And China was unable to supply its own base chemicals, so they have turned into a significant net importer. So the question is, will there be enough supply side capacity from capital investments within India and in India's petrochemical market to supply growing polymer demand? Although there's partnerships there, I see a bit of competition, because I think some of the petrochemical players, particularly in Qatar, Saudi Arabia, they're looking to India as a place they can export a lot of their surplus petrochemicals and polymers to, as we see China becoming increasingly self-sufficient. Great webinar, thanks. Thank you. One question for me: how will the slowdown in US shale growth affect ethane production in the next 3 to 5 years? Are you okay to answer?
Yeah. There's another one about kind of a similar sort of question as well. I mentioned some of it with like a gassier sort of production trends in the Permian that slow down things on the crude side, but that are actually pretty good for the NGL side. So that sort of production trends combined with all the infrastructure build out from gas processing all the way down to export terminals really supports the growth on the NGL side, and ethane in particular. I think let's see, like longer term, so like this year we have it about 4% year over year. A couple of years out, we sort of settle into a longer term growth of that's sort of a little bit slower than our gas team has U.S. gas production growing, but that's much faster than crude production, where our upstream team has crude production kind of plateauing. So we're kind of longer term, we're a little bit slower than gas, but we're not plateauing like crude is, as supported by all that infrastructure in the gassier production trends, as some of these as Permian ages kind of and becomes a little gassier. So that's kind of where we're at, and sort of more the medium term on U.S. production.
Yeah, I mean, There's
go
another
ahead.
question on US ethane coming under retaliatory tariffs. I mean, I can take this if you like, Nils. I mean, I
Sure.
know we can both answer it, but yeah. So our in-house view at the moment is that the Chinese government will not tariff US ethane imports for a couple of reasons. I mean, firstly, the CCP see petrochemical production in China becoming self-sufficient in base chemical production as like a strategic goal and a value added. So they're trying to support this industry. And towards the start of the year, they actually reduced import tax on US ethane by, I believe, 1 percentage point. So it's only about 1% now. So even though trade tensions are ratcheting up, China is reducing taxes a bit. I mean, secondly, and I think more importantly, nobody else can supply the ethane to China's growing ethane crackers, and the government are aware of the profits that ethane cracking is driving versus alternative feedstocks. At least the petrochemical majors are aware, hence why they're looking to convert away and pour a lot more capital into expanding ethane cracking capacity. So by tariffing US origin ethane, you're only going to be harming the local petrochemical industry, and there's no alternatives at the moment to pulling in or relying on US ethane. So we really don't think it's going to be targeted. And while we're on the topic, we don't think LPG either will be targeted, simply because of how reliant China has become on US LPG. And again, the pain and difficulty of switching away from US imports, simply because China's net short is so tremendous, and no other supplier can make up the difference. So yeah, at the moment that is not our base case. There's another question on Indian ethane demand, but I addressed that in an earlier question, so I hope that did answer all your questions. So are you able to explain more about how US fracking affect the ethane market? Well, in simple terms, you had a tremendous amount of ethane and other natural gas liquids being yielded when US fracking took off looking for crude. So I think Nils explained in an earlier question, the fields have been getting gassier and gassier. So it's essentially there's a tremendous amount of ethane supply and a knowledge in the market that this is a very valuable feedstock to efficiently produce ethylene. As I'm sure you're all aware, steam cracking ethane, you get a yield of just under, if it's high purity, just under 80% of ethylene, whereas if you're cracking, let's say, light naphtha with a 65% paraffinic content, the yield of ethylene is closer to sort of 30 to 33%, depending on the intensity of the cracker that you run the cracker at, rather. So it's just a very efficient, lower carbon intensity way to produce ethylene. And the realization that there's a tremendous amount of ethane in these basins that are being fracked was the opportunity there. And that's affected, obviously, not just the US market, but the global market, as we went over. So I hope that helps explain your question. And the final one, are you hearing the Chinese vessel port fees would be vessels built in other countries, even with Chinese parts? Ooh, Nils, are you able to help answer that one, please?
Yeah, I was just I was thinking, are we going to run into like a car situation where U.S. cars have parts from everywhere and end up getting slapped with tariffs too? I mean, there's vessel like retrofits and that sort of thing happening in Chinese shipyards, even with like Jones Act ships in the U.S. So definitely a concern. I don't think I've seen anything related to that in kind of the port fee discussion, but there's a lot of things that probably need to be tightened up with that. So maybe we'll get another version of the port fees that has a little more specific language on things, even terms like operator and things like that were a little bit in need of tightening up in the proposal language. So I think there'll be some incorporating some of that feedback, and we might hear more specifics about parts and that sort of angle of things as we get another iteration of that.
Yeah, no, perfect. So I mean, there's one other, nobody asked a question, there's one other brief topic I want to speak about before we close the presentation, if there are no more questions. But the decision by Chinese petrochemical majors to look to move away from LPG and naphtha cracking towards ethane cracking, and the tremendous yield difference for ethylene production between those feeds, we basically think now that China, who previously was on a path to become self-sufficient in ethylene and polyethylene or other major derivatives by the early 2030s, due to the conversions that have been announced, and if they ramp up on time, combined with the new capital being invested in integrating refineries with more cracking capacity, China's basically going to become self-sufficient in ethylene production sometime in 2028. Probably by the end of 28 is kind of a more of a bearish view. Based on the slowing petrochemical demand growth in the country, combined with their ability to build out tremendous steam cracking capacity that we've seen in recent years. So this has implications, of course, for the global market, in particular neighbors in South Korea, Japan. There's been recent announcements of companies in Japan looking to shut down more naphtha cracking capacity. There's a tremendous amount of net length in South Korea who rely on exporting basic chemicals and polymers to China and to Europe. A number of those crackers are going to have to shut down. China has the advantage of being able to currently buy sanctioned Iranian and sanctioned Russian barrels, which can help prop up their margins. And we think that's just that, combined with the government support, means that they're basically going to create a tremendous amount of net length in the olefins market going forward. And as we've seen in other industries, as we're seeing in the PDH and polypropylene industry, there's a willingness to turn to a net exporter and then kind of push those surplus propylene and polypropylene onto their neighbors, into the wider market, and force others around them to close. There's been a number of smaller, less efficient PDH plants in South Korea that's been mothballed. A lot of them will probably be permanently mothballed. So yeah, there's going to be a wave of rationalizations, which will happen a bit faster than expected because of the decision to move rapidly to cracking ethane in China, with some of these conversions going on. So that's my final sort of thoughts for the day. There's no more questions in the Q&A. Oh no, there's one more. Apologies. We saw the Panama draft and Red Sea tensions limit ethane trade in 23 to 24. Do you see any limiting factors for 25, 26?
I just pulled the Lake Ethane levels, and we're back up like well above the kind of 5-year max range that they have for water levels there. So we at least have that going for us. And our shipping analyst just put out an updated Red Sea thing that I don't want to step on, but Ciaran, I'm not sure if you have any thoughts on that.
No, I don't. I think you covered it. Yeah, I don't see any potential limiting factors at this stage. There's always some geopolitical risk, but thinking about the ethane market, especially the spot ethane market, it's going to remain the most profitable feed to crack it if you can get your hands on it. So even if freight rates go up, I think it's going to remain competitive versus refinery derived naphtha and even LPG by and large. Therefore, I think any trade flow limit due to geopolitics and rising freight rates will be limited. I mean, the bottleneck in the market right now is how quickly can you deliver the very large ethane carriers to start moving more US ethane into the crackers, which are either being converted or ramping up. And I think if you think about what happened in 23, is just how bad margins were across the board in Asia, and particularly in Europe with the energy crisis. There was a period of time where cracking ethane, especially if you are on ethane contracts which were linked to sort of a discount to naphtha prices, probably actually didn't make that much sense, which is hence sort of limiting summer, probably dampened a bit of the trade flow then. But yeah, we don't see that reoccurring. Right, thank you so much for your attendance and for the questions and the participation. Really appreciate it. This has been recorded. We're going to send everyone a recording. We're going to send out the slide deck to everyone who participated. So yeah, thank you very much again for your time, and I hope you tune in for the next one.